good, YouTube? I just want to welcome you to a 30-day lab. It's going to be quick, short, and sweet. It's actually going to be about 2 hours. It's a full-on class. We got notes that we hit. We got points that we're going to hit. We're going to make sure that they get the best understanding. That's the goal of it. If you want to be in the labs, right now I still have a deal where you can join the community and you get access to the course that we're learning, and you get access to the labs. It's just on a monthly basis. The best deal is to purchase the course. You get it lifetime, and you get access to the community for 6 months, which is literally the same value of the price drop to the course, $150. Very cheap, very good value. I'm in here teaching you. I'm answering these questions. I'm helping you get that understanding that you really need. But with that being said, I got to start this lab. I'm actually a minute late. But I just wanted to bring you in and
Yeah,
jump you
that's.
into it.
I think that's what I'm doing. Is
You can hear
like
them in there talking
I
already. So with
literally
that being
topped up
said,
my
welcome to the
my
30-day
LoughKey
lab, and I hope
account,
that you get some value from it
put
today.
extra what
Enjoy.
just put about extra $100, so that way from now on I'm just gonna do my life. I'm gonna go back to demo and just do like 1%.
What's
I was just
good, family? How you guys doing?
what it do, Lo? How
How
you
you
doing?
guys
Low,
doing?
I gotta I gotta ask you a question, Lou.
Okay, what's up? I got an answer, I'm sure.
All right. All right. What I did, I don't know if it's by mistake, but when I was topping up today, literally pressed the bonus, promotion bonus, the
Yeah.
50%. How does it work? Because I never really use it, so I
So,
don't know why I don't use
all right, I'm gonna keep it very simple. So say you
We'll
put
be right
in,
back.
okay, bro. Say you put in $100,
it.
and you're
Yeah,
getting a 50% bonus. So they're going to give you $50, okay?
yeah,
They give you
yeah.
on top of that so you're getting $150 to your balance. Now
Mm-hmm.
there's a net turnover, which this is your trades and profit together, okay? Losing trades don't count, it's just winning trades, okay? And it's called the net turnover. And this
Uh-huh.
is it's a point that you have to reach in the account for
Mm-hmm.
you in order to withdraw the bonus. Now, Pocket Options used to have it set up to where you could hit a certain point and you wanted to withdraw your money, but you didn't hit the turnover volume, so you don't get the bonus. You could just cancel the bonus and they take the bonus. But what they're doing now is they changed it. Is it's there's called a bonus profit. So the money that they give you, they basically the profit that you make with it. If you want to cancel the bonus, you can cancel it at any time. They'll just take a portion of the profit that you make and the bonus leverage that they give you. So they take, say you make $200 and you want to take $100 out. Well, they're gonna take $50 because they gave you $50, and they're gonna probably take. I think it's a half, but I don't know what the actual percentage is that they take. But they take a percentage
Mm-hmm.
of your profits. So the $50 that they gave you, and say $75 out of the $200 that you made, so you get $125 and they get 75 of it in $50. So does that make sense?
Not really, because I'm confused on this bit.
Uh,
Where I get the part cancellation,
yeah.
if but the part of what do you, how much do they amount do they need for me to ex-
Your net
exceed?
turnover. Your net turnover is, so say let me pull up Pocket Options real quick. It's easier to show you than tell you. All right. Well, I can't do a bone. Actually, I can. I can because I have. Give me 1 second. Let me pull up this other one. Oh, that's the wrong thing. That's a podcast. Cool. All right. So, say I want to add this. Let me go to deposits. So, right here, $100, and I add a promo. I think I got this one I haven't used. Welcome 50. It's 50% bonus, so they're gonna give me $50, right? Now the
Yeah.
bonus becomes withdrawable if your total trade amount is more than 2,500. So that's the amount of trade, like the amount of volume in trade. So if I'm taking $5 trades, until that amount exceeds $2,500, I can't get I don't get the bonus, regardless how
So
many trade.
2,500 basically.
Say that again.
2,500.
Yeah,
I gotta hit
2005.
2,500.
Yeah, if you're putting $100 in there, it'll tell you though. It'll tell you, and it's not your balance. It's not your balance. It's the amount. It's so like every time you take a trade, that adds to it. When you win the
Okay.
trade, it counts the profit that you win as well. When you lose a trade, it doesn't. You only just get the the entry for the trade that you took. Does that make sense?
Yeah.
Okay. Cool. So
So
good.
basically, if I'm correct, basically, I can only withdraw it if I reach up to 2,500.
The total trading volume, not your balance. Your balance doesn't have to reach 2,500.
Okay.
Yeah, so it's you don't because you're thinking that you got to get $2,500 in profit in order to withdraw it, and that's not the case. You just have to have a total trade amount of 2,500. So the total amount of money that you've traded total has to exceed 2,500. It doesn't matter how much money you win or lose in there. If it doesn't exceed the total amount that you've traded, trades taken basically is when you get to withdraw the bonus.
Okay.
So it's not your total balance. It's not like, I made $200 profit, that takes off the 2,500. If you say you made $200 profit, but total out of all the trades you took, the volume that you traded, the amount of trades that you the volume of it, that is over, say, 300. Well, you've already decreased it by 300 because it's going off the total amount of volume trades you take, not your
Okay. So it doesn't matter what the amount you're trading. Let's say if you're just trading $1 and you done it
Yeah.
2,000. Yeah. Okay. Now I get it. All right.
Yep. So every dollar amount that you trade basically adds to that 2,500. So the dollar amount that you've traded, once it exceeds 2,500, is
Yeah.
when you get to withdraw the
Makes
bonus.
sense. It makes sense. Okay.
And there's a if you go right here, you'll see this gift box on your chart. You can click that and it'll show you the bonus that you have open, and it'll show you the execution percentage. And then it'll show you the remaining trade amount that needs to be taken. So if you look, remember, I've only taken a couple trades, so the remaining trade amount that I need to take is $23.58. You could cancel.
Okay. So you can see it from here.
Yeah. You can always go. You can always go there, and I think it says right here. So look, it'll show you it shows you the bonus profit that they take. So if I were to cancel this, they're gonna take $47 and $1.53 of the profit that I made, the total profit that I made, and I get to keep $3.07 of the profit that I made. Does that make sense?
Yeah. Makes sense.
Cool. And you can cancel your loss with the coins. Yeah, you could cancel at any time. You just lose the bonus amount, and then now they've switched it up and made a bonus profit. Because it literally used to just be the bonus amount that you have. You could make 2,000 in profit, and say you haven't hit your trading volume amount, you could just cancel it and cancel the bonus amount, and you get all the profit that you made. they've made it more enticing to hold till the end of the trade volume, which it's you can't complain. It's adding leverage to your account. If
Yeah.
you want to go fast,
Yeah.
you got to have leverage. It's just part of the ball game. If you don't really care about having the extra leverage and you don't want to have to worry about not keeping all your profits, which right there it's obviously you get 75% and they keep 25% is what it looked like, because I'm only in profit like $5 or something. This account just started, so
yeah, if I haven't traded and I can cancel it, and
yeah,
then they don't take my profit because it's
they just take the bonus.
okay.
Yep.
All right. Now I'm gonna try this bonus, even though I pressed it by accident when I was topping out my
Oh, okay.
$100, and I wanted to keep it like my 150 so I could start doing
Yeah. Yeah.
because my mind was like saying the more I do well on my demo, I do so good in a demo, but I'm just doing terrible. So I'm like, I need to practice on my live trading then rather than
Right.
on,
Get rid
on
of
the
the
dollar.
emotions.
So
Keep it small
yeah,
amounts though. Keep it small amounts till you get.
no, just keeping my rules of 1%.
Yeah. Yeah. There you go. There you go.
Compound. I'm compounding 0.89%.
There you go.
So
There you go.
which is a dollar. So it automatically.
Yeah. All right. All right. How's everybody doing tonight? I hope y'all are doing good. Um. So let me ask you guys real quick. Everybody got a good understanding of
Hey
momentum.
Alex.
What?
No. I was saying hello to Alex.
Oh.
I don't know if you can hear.
Oh. Everybody got a good understanding of how to make zones, and they understand their areas of interest and stuff. You guys got a pretty good understanding. Feel free to type it in the chat. What's up, fellas? What's up, Alex? How you doing? We are recording this too for YouTube, so hey, say hello to YouTube. They can see you in the chat.
What do you do?
They can hear you too as well. Yes. Yeah. So, and is there any questions? Any questions for anybody that's been in here? You guys, everybody good, y'all? Doing pretty good. Besides
I just
Abdi's.
want to know what market are you looking at? So
That's just still Microsoft. I'll let you know when I look at a chart. I got you, bud. I got you. No questions? No questions? All right, good. Good. That means everybody's getting a good understanding. I don't, because I haven't reached that part of the course. Yeah, I should hit by it. Cool. Can you give a quick review?
So,
Of zones?
so I do have one question.
What's up, Alex?
So
What's good?
What's up, bro? So I'm noticing that you only have one indicator, right?
Yeah.
Which is very different than obviously all these weird people that you see on YouTube and stuff.
Yeah.
Is that because of your understanding of how price action works?
Yes, sir.
That is.
So, when you look at the Hakanashi itself as a indicator in itself, because it's showing you average of price, it's not showing you like price, like it's just showing you the average of price. So we utilize that because it's way cleaner. But yeah, I don't use indicators because I trade strictly just price action. Because indicators mainly get all their information off of price action, and it's just lagged. So it's just way cleaner, and I utilize the EMA because it's an average as well as the Hakanashi is an average, and they go hand in hand, and it helps you get very good entries when you're in a trending market, and it's obviously a key area where price likes to pull back to, and that's how we use it for another confluence. That answer your question, my man?
Yeah, it does.
Cool. Can you give a review? What is a good zone, a bad zone? good for range market, more range markets. Yes, sir. It's actually that's what the EMA is for ranging markets. A lot of indicators are for trending markets. They're not really for consolidated markets, because the best market to trade is a trending market. A lot more opportunities.
She said not for me. Yours has not been accepted.
Say that again.
I guess she meant somebody else.
What'd you say, Woo? I don't think he knows that he's unmuted.
No,
Oh shit!
that wasn't me.
My fault.
Yeah, bro. I was like, I don't think he knows that he's unmuted.
And I'm about to mute myself. My fault.
No, you good, bro. You good. All right, so Lou said, what's a good zone? What's a bad zone? I could go over that for you real quick. All right. So when we look at zones, we're looking for major zones. Your major
Just
zone.
till I got on here.
You still unmuted, my man. It'll be all right. So your major zones are going to come from the higher time frame. Now you can decide whether you want to do it on the 15-minute or the 5-minute. I like 5-minute time frames. It's a lot easier for me to find my 1-minute trades, my 3-minute trades. I'm taking quicker trades. If I need to understand what's kind of going on, or maybe I'm missing something on the 5-minute, you'll see me from time to time go to the 15-minute because I can get a better picture of what's going on. If you've been in the zone, you'll understand that through the bigger picture. We can see a lot of what's going on just off of the higher time frame. Now, good zones are going to be zones that price makes strong movements at, or strong placements, or like pivots more or less, you could call it. But it's just it's where price is going to react very heavily. Now, I moved to a different chart because obviously trending markets are very easy to see. So I want to show you some good zones and give you a good idea of what we're looking at. So when we're looking for these higher time frame zone, I really got kind of like two setups I use. Like not two setups. I got like three zones on the higher time frame that I'm really just utilizing. There's other zones that can come into play when you get actual, like if you're in a zone. Like let me give you a different market, because this market got that liquidity change, and to make it easier to explain. And everything is just trending. It is just a beautiful market tonight. Look at this. This is just, when you get stuff like this, you see all the charts trading and stuff. It's a good night to trade. You're gonna be getting some good wins. This is decent. We'll use this. Right now, I'm on McDonald's for you, Abdi. I'm on McDonald's. I know that you said you wanted to know. So now, I'm looking for, when it comes to this situation, you're gonna have extra zones because of where price is at. Price is kind of in the middle of structure, so we need to understand where it can possibly go to and where it has came from. So let me get this. Now, good and bad zones are kind of relatively I don't really know how you, like a personal preference, more or less. There obviously is areas that obviously make way more sense than others, but when you look at a zone, don't think of it as just these lines. I probably repeat this every single time I say this, but it's a consistent thing that you really gotta pay attention to. Yep, multiple touches, but strong touches. Just because it got multiple touches don't mean it could just be an area of interest, like a midline, or where price likes to play at, because there's buyers and sellers both sitting in that area, causing price to go back and forth multiple times, causing lots of touches. Something similar to this. Like, you could say that this obviously down here is a good zone, but right up here is your main zone because it made the strongest push. It touched multiple times but made the strongest push. This zone down here is more of your midline. And we understand the midline as is similar to your major zones. Similar, very similar, but it's more where price will play at more often than not. Your major zones are good key areas where price will make a nice reaction. It will come and it'll confirm, and then it'll push away either hard or it'll break pass through and then give you a confirmation. As you can see here, price broke through, confirmed the zone, and then it gave you structure down here at the midline, and then it came back and retested the major zone and pushed off hard. And as price picked up momentum, it crashed to the midline where it recently played at, and sellers had control of the market and they pushed it back down. Now you'll see there's a kind of a zone here and a zone here in the market. These are our lower time frame midlines. We can utilize these points. Let me highlight this. This white line is our midline, our 5-minute midline, and we can utilize this as just another major zone, but we don't want to really trade from this zone unless we have a strong confirmation. Why? Because you get scenarios like this where price will pull, it'll pull back to the higher time frame zone, and then it'll just pull back here, and it'll just give you stuff like this. And you'll see that more when we get down to the 1 minute. But on the 5 minute, it's not so bad because it's such a higher time frame that there's not very much playing around going on the higher time frame. When you have a lot of playing around going on in the higher time frame, you'll see a bunch of dojis or stuff like this. This is nonsense. When you see this, just get away from the market. It's nothing good. It doesn't matter if you're on the higher time frame and you're trying to trade this move. Look how nasty that is. We don't want to trade that. We're looking for these moves. This is what you're looking for, because you're going to get better. You're going to get better trades. You're going to get more entries, and the confluences are going to be a lot stronger. Sideways markets are good to trade, but you don't want to get caught in this bull crap. This is all this is all at a midline. Price is just playing at the midline. I could zone it out, and if you could see, here's one major zone. Your other major zone's kind of down here. And then your midline's in this area, and price is just playing at it. Buyers and sellers, you didn't know who had control of the market at all throughout this whole area. But you could go to the lower time frame and find entries, but they're not going to be probable. They're going to be very kind of high risk, more of a gamble, taking assumptions, because look at all the wicks. It's unstable, and there's not much volume to it. When we talk about volume and momentum, look at the candles. Look how big they are compared to, look at this pullback. You don't want to be caught in this. You want this move. You want that big, strong move. This is 15 minutes or 20 minutes of a nice, strong move. Let this candle close. You got 15 minutes of a nice, strong move. You can find a 2-minute, 3-minute trade inside of this 10 minutes. So we're looking for nice, strong moves. You don't want to get caught in the weak little no momentum, price not knowing what it wants to do. Wait for momentum to pick up. That's why you'll see me always talk, I'm waiting for momentum. I'm waiting for momentum, because momentum is a key part of this, because we're trading price action. And we want momentum to be on our side to help push the idea and the move that we see happening. It'll help push it faster, and it'll help give you more of a confluence that, hey, this is a good trade. Remember, trades that you take that are close to your entry aren't good trades. Regardless if you want it or not, it's not a good trade, because we don't want price to be anywhere near our entry. We should be taking entries that are, once we take that entry, it's a good entry, price is taken off. Why? Because we're waiting for so much confluence to happen. We're trying to get that best entry. If you're taking a 1-minute trade, you got to be on point. You can't be hesitant. You can't wait. you can't like you can't say you can't wait because you're supposed to wait, but you can't like take assumptions. You have to be on point because you have little room for error on a 1 minute trade versus you taking a 5 minute trade or a 3 minute trade. You got plenty of time for if price wants to give you some drawback or price needs to breathe at it pushing and it hits an area of interest and you're going to have a little pullback. You got plenty of time for price to continue to push down and momentum to pick back up, because when price is very slow and there's a lack of momentum and you see it start to make a strong move and momentum picks up, it'll pick up, it'll slow down, it'll give you a little pullback, and then it'll pick up again. Just like how we see here, price picked up real hard. Like, look, dead, nothing. Momentum is slow, right? You get this strong move, but what happens? It completely reverses when it hits this higher time frame zone. Momentum is super strong, and then it slows down, pulls back a little bit, starts to pick up, and it gets bigger. And then as sellers and orders start to fill into the market, you can literally watch price just grow. Like, look at the momentum here. This is moving quick. When you take this entry right when this closes, it's over. Price is all the way down here. That's a cleared entry. Versus taking this, it's gonna be close, but that's still a good entry. But when you get over here and, oh, I got this close, well, now you're mad because you just took it off this, and you have to add everything together. You have to utilize the higher time frame to get the understanding of what's happening on the lower time frame. In the lower time frame, we can understand what it's doing. It's forming the higher time frame. So if you're just utilizing one time frame, sticking to one time frame, and not understanding what's going on the higher time frame, well, then it becomes useless, because the lower time frame can be downtrending and the higher time frame could be an uptrend, and the higher time frame holds the most weight. But right now, the lower time frame has to do this pullback on the lower time frame. It has to downtrend in order to balance out the market, and then price will continue in the trend in the direction that it was going. Do you look for any entry pattern, or do you just wait for level line break? I look for market patterns, and I utilize those as like building my case and my idea. And I will utilize, say I have a head and shoulders, and price retest the neckline. If price has already retested the neckline once, and it gives me a retest again as a second shoulder, I will trade the completion of that pattern. Once I get a level line break, I'm trading that, hey, I understand that it's already formed a shoulder once. We've already got a little push normally on a head and shoulders. When I see certain head and shoulders, if I get a double shoulder, price will normally push down, or I get like some form of like uptrend shoulder reaching the neckline and price pushes down. I'll go all over that in the pattern section. But yeah, I utilize market patterns. I don't really focus on entry patterns. If you're talking about like candle patterns and stuff like that, no, I don't utilize candle patterns, because I only trade Hakanashi on high frequency, because level lines only exist on Hakanashi candles. They don't exist on traditional candles. So I can't find a level line for an entry if I'm looking at traditional. So good zones, you're looking for strong moves where momentum has pushed through, and your major zones are always going to be from the higher time frame. And you can have something where it's like this, where it gets strong pushes, breaks through. This is good, because what's happening now is price is confirming this zone. Because just like it's very similar to supply and demand, or support and resistance. The zones are literally that, but people just use different terms. So we want price can be underneath the zone, and it can confirm underneath and continue in sideways market. But when we get breakouts of zones, we want confirmation. We want price to come back and confirm that breakout, because just because price breaks out doesn't mean that it's going to continue to break out, because there's 3 stages of the market. Remember, you got the you got the accumulation, the manipulation, and the distribution. Manipulation isn't the broker on the other side manipulating price against you. Manipulation is where it goes to one side, collects liquidity, and then it starts to push to the opposite direction. And maybe it collects that liquidity at the opposite direction and then continues back in the direction that you thought, or it's the complete opposite of what you thought, and it just swept liquidity resting above where you thought it was going to go, and then it starts pushing the opposite direction. Can you quickly put a minute chart and just see how the zones look? Yeah, I'm gonna go over the minute chart as well. Just making sure you guys get the understanding of major zones and why I'm pretty much utilizing 3 zones. Now, when I have a scenario like this, I always have like a third zone, and it's not gonna be a green line. It'll be a white line because it's more or less a midline. Because after price pushes off a major zone, it'll come to a point where normally it's in the middle of past structure, or it'll come to the bottom of structure, and it collects liquidity and say sellers take control of the market and pushes it down. In this scenario, this would be my next target right here, and then my next major zone as a my green line will be kind of somewhere probably right around in here because it's at the bottom of here. And you could bring this down, and these can be adjusted. You can adjust these as you go to the lower time frames and see certain scenarios. Like right here, I can understand that price touched it once, pulled back, and then it fell through as it retested it, and you'll be able to see it closer and easier when you get down to the lower time frame. But don't just think of, I need my line to be on point. We're utilizing areas. We're utilizing the area because the area is key. You need to have the ability to understand what you're looking at before you try to get all detailed and all that stuff. When you start understand, hey, I understand my zones. I don't got to really ask, about zones. I know my zones. I can see the zones without having anything on the chart. Okay, now get more detailed with it. That's when you can get rid of the box, and now you're focused on the lines. And you'll understand that, okay, like when I do my charts, you'll see that normally I try to keep everything like even, like see how like this box is bigger than here. Okay, well, I'm probably going to adjust this a little bit just because it's what I like to see with my eyes. Like I like to see certain things. It helps me understand the market better. And that's what you have to do. You're getting the understanding of how I'm viewing the market. You're understanding price action. But what you see might not be what I'm seeing. Your eyes might be telling you something different. You have to be able to understand what I'm telling you, so then you can utilize that to be able to build the understanding for yourself. Like, all right, I see why these are the zones. I get this. Okay, here's my zones. Here's my midlines. And now when we drop to that lower time frame, let me get rid of these other zones because they'll just confuse you. When we get to that lower time frame, we can easily see our midlines without even having to go to the 1 minute time frame. I already seen my 1 minute midlines without even having to go to the lower time frame, just because I've done it so many times. I know that, hey, this is more than likely where price is going to play out. Buyers and sellers are going to be fighting for control of the market, and we can utilize that A for a target, or B for the understanding that, hey, if I'm trading from here and this area is in my view for price moving, maybe I need to adjust my timing, because if I hit this area, what has happened in the past is price came here and shoved off every single time very hardly, or very hard, or has price crashed through it every time, and I don't really have to worry about it. Understanding how often price plays at a midline will tell you how strong that area is. So when you get down to that 1 minute and you see areas like where price has made structure, these are your areas of interest. If it happens often in the past, well, that's a strong area of interest. If it's only happened maybe a couple times and all the other times prices really just crashed through it, well, it's not really that strong of an area of interest. So as price comes to that area, well, if it hasn't been like, it hasn't pushed price away often, like most of the time price came through and it had a lot of momentum on it, it just shot through the area of interest. Utilize that and understand, oh, okay, I can take a longer trade because I have enough time, or I can take a shorter trade because I don't need to have an extra minute on it in case price does hit this area. Because there's times that you'll be trading from maybe a major zone and you're trading to the higher time frame midline. Well, you're going to have this lower time frame midline. It's going to be your key area of interest where price is going to probably come to this point and react. But in this sake, what happens every time price comes to it? Well, if it's coming off this major zone, well, here, crash through. Oh, well, didn't make it all the way up there, but it crashed through. So when I see this, if I'm coming off of this zone, that's a weak area, because price more than likely has pushed off and strongly pushed through. That when it has momentum, look right here, it touched multiple times, but there wasn't momentum. There wasn't enough momentum. Look at the candles. We have to understand everything that's going on with price. The Hakanashi gives you the ability to see, hey, look at this momentum, strong momentum, pullback momentum slowing down on a pullback, normal. Strong push off of this EMA. Hold on now. Now we get some structure forming. All right, let's just wait. Let's just wait till when we see this forming. Let's just wait till we get a nice body close. Right here, boom. Okay, we see this. We can drop to that lower time frame, maybe the 15 second or a 30 second, and you could get a more detailed entry, so you're not waiting for the entire close of this candle. But when you see momentum picking up on your side, it's not a big deal to go down to that lower time frame and try to get a better detailed entry, so maybe you don't miss that entry. Because maybe you are trading a 1 minute and you want to just trade to this area. Well, if you're waiting for the close of this candle, oh, you might be entering a little late. In this scenario, you're not, because momentum was on your side and it pushed it all the way down past the midline. But you know, there's scenarios where that'll come into play, and you have to use your better judgment. That's why journaling is such a key component. We wait for the body to close, then we enter. Yes, sir. Yes, sir. Wait for the candle to close. And when we have, like, in certain situations, like this situation, if I have something like this, I'm waiting for price to close underneath all this structure, because level line in this scenario, there is none. There isn't a level line for me to visualize. So how am I visualizing this? Well, what happens in a trending market? Price makes higher lows and lower highs, right? And then, so we utilize that information. If it creates a new low, well, then price is probably going to continue to push a little bit, especially if momentum's on our side. We can utilize that information. I could understand off this market that, hey, momentum's on my side, because this, and then we had a nice confirm of this push giving us this momentum. And then what happened down here? Oh, well, we're building some structure. Let's just wait. I'm still coming off this major zone. I'm coming down to here. I see price coming down to here. And you're just utilizing the information, the understanding of everything that you're seeing in the present time. We utilize the past to see the future. Doesn't mean that everything that's happened in the past is going to happen in the future, but it's very relative. If you zoom out of a market, you'll see what goes up comes down. Price will normally balance itself out. You're just so zoomed in on the market, you're not going to see any of the balancing out. You're just seeing all the little minor moves of price collecting liquidity and distributing that liquidity throughout the market. So we're capitalizing on the understanding that we can build from all the information that you have with the market. Does it make sense? Are the zones make sense? We get why we're using the zones. We get why we want to see momentum. We understand the momentum with Takanashi.
Yes.
Appreciate it, man. Thank you. So
Nobody else saying nothing.
yeah, I know. So, but it's all good. It's all good. It's all good.
Orange crowd. Orange crowd.
I'm just waiting for him to type. See what he says. Sometimes Geo on the 5 minute, we don't have to. We don't always have to wait on that close, because if we got momentum on our side and we have a good understanding of what's happening, think about how many times when you get on the higher time frame and you get a nice move like this. Well, if this candle's shooting down and it just continues to shoot down, and you don't try to zoom in and get to the lower time frame to maybe see the pullback that's going to happen, because you already have that understanding and the idea of, hey, I've already made even tops. Like I've pushed off this higher time frame, and now prices, it's broke the level line, it's breaking structure, and momentum is on my side, but I need to wait for the close. Well, if your confluences are lining up for you to have a higher time frame move happening, it doesn't hurt to go to that lower time frame to already kind of anticipate a move, but you're not taking it off the assumption of what you're seeing. You're allowing price to confirm what you're seeing. So maybe it gives you a head and shoulders on that lower time frame, or maybe you're getting a trend down on the lower time frame, so you're able to see price pulling back and you can capitalize in on that. So that's why we utilize the close, because in certain scenarios the close is a key part, because it can prevent you from taking silly mistakes. In a situation like this, in this candle, how it's moving, a close is your best choice, because when you get a close with this, well, you got momentum on your side, because that means the candles, it's getting bigger. As the candle gets bigger, momentum is building. And we already have the understanding that, hey, we're at a key zone and we're pushing back down to either the midline, or in this situation, we would be pushing back down to this midline, confirming this structure. But it looks like it's probably going to push off. I'm just trying to give you a scenario. I hope that was useful. So let's talk about, what is price telling you? So when I talk about understanding what price is telling you, this is understanding your tendencies, understanding what's happened in the past, like what's going on the higher time frame. So let's see. Let me get another market. This one is. So in a scenario like this, how I can't really see much of anything of another zone, I go to the higher time frame. I'm getting more of an understanding on this strategy. Good. So there. In a scenario like this, when you look at the 5 minute and you can't really see much of anything, and you got to scroll all the way back to see where price is at, it doesn't hurt to go to that higher time frame and just view the market zoomed out. It doesn't hurt. It's not going to hurt you. It's not going to make things changed up too much different. It's just an added layer that you have to analyze and understand as you go through the market. But it's very useful when you're in scenarios like this, because you don't want to get caught in a market that is overextended, overbought, and it needs to breathe. Look how prices, it's so overextended, momentum super strong. These are 15-minute candles. So this has been going up for at least, 1, 2, 3, 4, 3 hours. It's going on 3.5 hours. So 15 minutes, that's 30, 2 hours. It's going on 2.5 hours. I apologize. So understanding that we can utilize this higher time frame to know, okay, we're hitting a major zone on the higher time frame. We can go back down to the 5 minute and understand what's going on. Now, when I say see the bigger picture, this is what I'm talking about. We want to be able to see what's going on in the past, because the past is what's going to help us in a scenario of this situation. Now, the only reason it's going to help us is because these zones that it's already broke through and areas that it's already touched they're going to come and play again eventually, because price is going to more than likely pull back from where it's at. So now all I'm doing is kind of understanding where is price going to pull back to, because we know that, hey, it's super overbought, lots of liquidity sitting behind it, and it hasn't balanced itself out in a while. When price does this, it normally has to give us some type of balance, and that's how we can capitalize on a specific move. So now I have my zones off of the past, and all I'm doing in this circumstance is just waiting for price to tell me what it's going to do, and it's called waiting for price to speak. So if you were in the session earlier, you've seen I steady waited on confirmations, because confirmations are your highest probable trade. So we have price pushing off of this zone. So in this situation, let me ask you a question. Are you going to take a sell because it's just because it's pushing off of the zone, or what are you going to wait for? Let's see if anybody's going to answer. People might not answer. If nobody answers, it's fine. It's not a big deal. Go ahead, Abdi.
Can you repeat the question again?
So prices came and pushed off of this higher time frame zone, and now it's starting to pull back. What would we be looking for just because momentum is on our side? Are we looking to take an entry then, or are we looking for, what are we looking for in order to find an entry off of this move?
Well, I would wait for the entry in my area zone. If he goes into my area zone, then I know that's my entry zone.
Okay.
But in the meantime, he can pull back on me in any minute on the next candle, so I'll wait.
Okay. Yeah. Okay. Gio said it. Alex said it. Lou said break your retest. A break and retest, yeah, if it does break this zone, you'd want the retest, the confirmation, but a confirmation is exactly what you want. So just because price is pushing down, and say price shot down, like it's shot down and you're sitting there like, damn, I got to get in, I'm going to miss this entry. Don't, because you've already missed the entry. If you're thinking about you're going to miss the entry, you've already missed the entry. There's no reason to rush to try to get into an entry. There is ample opportunities.
We can't hear you, Lotus.
Oh, you can't hear me? Sorry, hold on. Let me turn the light on for
Sounds
my
like
son.
a robot.
My bad.
it's
I'm
kinda
sorry.
lagging.
Oh, it's
Is it
lagging?
storming over there or two?
Yeah, it is storming. Is it good now? Is it good?
Yeah, it's messing with the connection.
Okay, give me
Storming
2
here,
seconds.
too. It's messing all my junk up right now.
Give me 2 seconds. Give me 2 seconds. I'm sorry. I had to turn the light on for my son. So if it is lagging, don't worry. I am posting this on YouTube, so I'm recording the whole session. So don't worry about that if it's lagging. But Gio was right.
It's
Alex.
a robot.
Yeah, I know.
Sound like a robot.
I know. Does it sound? Is it better now? Is it better? You can't hear me?
No. No.
Well, we can hear you, but we can't understand you.
Okay.
Sound like a banjo. Heard that.
Wait, try restarting. Try just like exiting and then coming back.
That's
There we
what
go.
we're going through.
There we go.
We got a big right on top of us.
Yeah, we're getting hit hard right now. It was at red. It was red. So I
You
might.
sound better.
Yeah. It also might be because let's see. I have some other browsers open, and they might be pulling a lot of megabytes. Cause some of my browsers will tell me how many megabytes. It's probably this Pocketoption. Is it better? No, it's not better. Shit.
It's doing better now, yeah, than what it was. It was real good until
Yeah.
you open the stream back up.
It's okay. All right, let me do this. I'll decrease the quality of the stream. Sorry. Boom.
You good, bub? Ain't nothing but some technical difficulties.
That's part of it. Be right back. There we go. Should be good now. Let me see. 720. Should be good. Nope. Still bad. Still trash. Good? Everybody good?
Yep.
All right.
Yeah.
This is the best I
Yep.
can do. I think I can turn my phone off. Let me see. My phone's connected to the Wi-Fi too. There we go. There we go. Way better. Way better. Y'all hear me now? We good?
Yep.
Good. Good.
Hell yeah, brother.
Hell yeah.
So yeah, Gio is right. We wait on a confirmation in this scenario. Now, if we have some type of structure that formed, this structure is not good enough to me. I don't like that structure. It's not strong enough for me to take an entry because my target would be this area. I need another confirmation. I need something that's price is now reversing. Why? Because look at this move. We need something strong to tell us, hey, we're going to start balancing out the market and collecting liquidity that's sitting underneath of all this. Because remember, every time you get structure and price pushes off hard, it's liquidity. That's liquidity sitting underneath there. Buyers took control of the market. Here. It's money resting there. And the market will go collect money and distribute the money as it moves. That's why there's 3 stages of the market: accumulation, manipulation, and distribution. That's all the market does. The market can only go 3 ways. It goes up, down, and sideways. It technically can go up and down, but sideways is another scenario of, say, market, per se market. So we understand how to kind of really understand how we use zones. How do I really want to say this? Do we understand how to see zones and how to understand what a good zone is and what a bad zone is, and how to know strong zones, and we understand momentum and seeing momentum with Takanashi, and we understand all of that. Let me just make sure we get an understanding of that first. We good there?
Yep.
Cool. All right, Nick answered for everybody. Cool. All right. So, do we have a good understanding of when I talk about price is speaking? Like, I'm looking for price to speak to me. I want to trade what price is telling me, not what I want price to do. We understand that? We got a good understanding of that?
Yeah.
Because it's something that you'll hear me say often throughout my trading. You want to be able to have an understanding of the things that I'm talking about. So when I talk about them, you don't have to be like, hey, what are you talking about? You can, all right, I can see what he's talking about. I get it. I would do it like this, but I get what he's, it's always okay to I'll be like, oh, well, I see it like that. That's fine. If you see it like that, it's perfect. It's not. There is no wrong, there's no wrong answer. The only wrong answer is you not trying to answer. You're you're going to look at things and be confused because it's new to you. Regardless of how much you know, there's still going to be scenarios and times that you might look at the market and be like, what the heck am I looking at? Because there was many times that I get in the market and be like, what the heck am I looking at? Even after making tens of thousands of dollars, I still look at the market like, what the heck am I looking at? Like, do I even know what I'm doing? Did I just get lucky throughout? Which again, like I said the other night, luck only comes every so often. You can't consistently win and think that that's luck. That's not luck. Luck just doesn't happen over and over and over and over again. If it did, we all would be playing the lottery and we would be winning. We wouldn't be here, that's for sure. I mean, if I had good luck, I probably would be I would be winning the lottery. That's what I would do. But we don't have good luck, and luck only comes with preparation and all that other shit they say behind it. But as long as we got a good understanding of price speaking. Cool. So the last thing I want to go over, and then if there's any questions, I'll break down them. We want to talk about, hold on. Let me see here. Okay. Cool. I'm waiting to see what Gio got to say. Just waiting to see what Gio got to say. With the price. See why we always wait for the confirmation. Look how it's not confirming. Let's break it through. Now, if you was trading with the trend, you'd have took that trade. It's not a good trade, though. Because price could push through and then fall through. Just wait for price break. Just wait for price break your confirmation and don't rush your entry. Yep, pretty much.
It looks like pullback.
Say what?
It looks pullback.
Yeah. This. All right. So the EMA, we got an understanding of why we use the EMA and what the EMA is best used for, best cases, and kind of really what the understanding of the EMA is for. I'm asking. I'm going to go over it. Yeah, I'm going to go over it anyways. I'm just asking to see. I know Gio said it's best used in a trend. That's 100% right. It's definitely best used in a trending markets, because it helps give you the, hey, EMA's holding. The close. Okay. Yeah. Okay. So the reason why we're utilizing the EMA is because you understand that Hakanashi is showing you the average of price, right? The EMA is really kind of painting price average as it goes. It's a lagging indicator, so it's kind of painting price average as it goes. We can combine those together and help us just really get a good understanding of the best entry when we get some form of pullback, because on the Hakanashi candles, you're going to see the EMA hold a lot better and a lot stronger versus when you would see it on traditional candles. We went over that, I'm pretty sure yesterday, how I was showing you the difference between Hakanashi and traditional and why we're using Hakanashi itself and how we can kind of see certain situations in price coming back and testing that EMA for good confirmations, or if we're on the higher time frame and we're trying to get another good confluence of, hey, price is still continuing the trend. Well, if that EMA is holding, you know that trend's probably continuing. So we can look for that. Now, the EMA is a wonderful tool when it comes to trending markets. But how can we utilize the EMA when we get to a consolidated market? Do we got a good understanding of how to utilize it in the trending market? Do we got a good understanding? You know that we're kind of just utilizing it for like our pullback, and we want price to hold on it. Now, like entering off of it, you want obviously strong momentum coming off of the EMA. You don't want to just take, oh, the EMA got touched, let me take the entry. That's not what we're doing. We need multiple things to coincide with price touching that EMA and it actually holding. Say a scenario like what's happening right now. For this EMA to really make sense and hold, well, price needs to continue to push up and break this structure right here. Just because it's above the EMA and it held right here does not mean that this EMA is a strong EMA, because we're kind of in a sideways market. So taking the entry on this, you would have dropped down to the lower time frame and took an entry like a 15-second, and you would be looking for something to this formation. But as you can see, you can't utilize the EMA because it didn't hold. Price is underneath of it. So I mean, you could count this push back up and holding, but we're not looking for that. When you're wanting to take an entry off the EMA, you want something similar to this, something similar to this. It doesn't have to even touch it. You could come to scenarios like this where price doesn't even touch it, just like you would use on the zone, like on a major zone. Think of an area. Let me get my pen. Think of an area around this line. Now, price can bleed through that line. Like you see here, price bled through, but it still held. And then it contested it again, and momentum picked up and kept pushing. So we know it's okay. Price can bleed through, but when we see something like this, you get a doji, it's okay. All right. Oh, sorry. Let me see. It's all right if this is your level line and you're waiting on the close of this candle, and then you get the close, so then you take the entry. There's nothing wrong with that just because it didn't take this, but you need to be you need to have the understanding and the awareness that, hey, this is the EMA's holding. I'm utilizing the level line as my confluence to take this entry, and I got this good understanding that, hey, price it's kind of retested this EMA and it's holding. So I can add that to the confluence, but I can't utilize this as my main confluence because look how price it's not there yet. When I'm looking for a main confluence off the EMA, I'm wanting something like this, where price gives me strong momentum, but it can't hold. It starts to like balance out, like it immediately shoots back, comes back to the EMA and stays in this area and then slowly pushes off. Your best entry is here because this is your pocket.
Be right back.
Go ahead, bub. Let me see here. So utilizing the EMA in a sideways market, we're going to go down to the lower time frame. Let me get this. I'm pretty sure this right here is a sideways movement. Yep, right here. And I'll show you. Just like we would utilize it in a trending market, remember, the market on a higher time frame in a sideways movement is making trends on a lower time frame. So we can utilize that information to help us find good entries, but you always have to have the understanding of what's happening on the higher time frame. It holds the most weight. The move that you're looking for is gonna be a lot stronger on that higher time frame, and we can utilize that understanding in taking entries on the moves that are going on the lower time frame, because we understand, hey, even though it's downtrending, we know that this is forming that higher time frame uptrend move. So we're just waiting for that pullback to hit the zone below, the stronger zone, and we're going to wait for confirmation and take it. Word of the day: confluence, a coming or flowing together, meeting or gathering at one point. Yes, sir. Yes, sir. So we go here. I'm just trying to help you. I'm just going to show you this EMA on the sideways market. So we got our sideways market. This is the 5-minute chart, and it's American Express. Wait for confirmation, then trade with. Yes, sir. Yes, sir. There you go. That is exactly right. So right now we have a breakthrough the higher time frame midline. When we have that, what we're doing, waiting for confirmation. And confirmation is more than likely going to be in this pullback happening in this candle, or it possibly happened in this candle. We could see that on the lower time frame. It's going to happen in this candle, hopefully. And we want it to come down somewhere down in this area. We know that we got this zone here, so price can really just come there and really just, but we know where it's going is more than likely up here, as long as we get a confirmation with the situation that's happening right now. Okay, so how we can utilize the EMA, very similar. We want the EMA to hold it. It adds a confluence to our entry right here. See how the EMA was very close? Well, it was very tight, but it held. Good entry. The only reason we're not taking this entry right here is because of this midline. Even though we got a nice pattern right here, you got a nice head and shoulders pattern, we're not taking that entry. It's not the best entry. Now, when you get good at trading, you'll take more aggressive trades. You'll take a little more risky trades because you have a good understanding. You'll see me take scenarios like this. More than often not, though, I'm probably not going to take no entry like this. I'm waiting for the confirmation down here. So, because this trade right here is way more probable than you taking this trade just because you see a head and shoulders pattern. Just because it would have played out, that's great, but look where you're at. You want to play with your money in an area that, hey, look right here. You might see a head and shoulders in this, but what happens when you get this and price shoots down? Well, there's your head and shoulders the opposite way, ain't it? Like your traditional head and shoulders. So you have to be very patient and allow price to tell you what it's doing. We don't care about anything that's going on, and we don't care. Oh, dang it. We don't care that price is making strong moves or it's trending in a strong direction or we missed our entry. We don't care. We're waiting for price to give us our entry. We don't anticipate. We don't assume. We take what price is telling us and we utilize that information to get the best entry. Right now, price is breaking this EMA. In my mind, this EMA is still holding. Just because it bled through is no different than it just touching the line and continuing up. Now, when price breaks through and gets below a specific point, say down here, that trade's no longer going to be valid. In order for me to have a trade continuing up and it break all the way down here, I'm going to need a confirmation. Always take a confirmation. So now what I'm looking for is a confirmation for price to confirm. And I can utilize the EMA when I get a nice pushback. I can go down to that lower time frame because we can still utilize the 15-second and the 30-second EMA, but they don't hold as much weight because look, price crosses them often. So if you try to utilize this just all on the 15-second by itself, it's not going to hold as much weight compared to that 1 minute time frame. 1 minute, 5 minute, best places to utilize the EMA because it's going to hold the most weight. Just like your higher time frame zones are going to hold the most weight. And when I say it's going to hold the most weight, that just means that is the more likely case to happen. It doesn't mean that that's always going to happen or that's exactly what happens every single time. It's just the most probable case to happen. When you're wanting to become a trader, you got to understand it's a probability game. We're trying to take the highest probable trades. We know that it's inevitable that we're going to lose at some point. There's going to come a time that we're going to probably hit a losing streak and we might lose over and over and over again. But as long as we stick to the process and we focus on the highest probable trades, you can't fail. The issue is when you get emotionally attached to the money and then you start taking non-high probable trades, you're not sticking to the process, is when everything just starts to spiral out of control. And why a lot of people never make it back is because they don't hold themselves accountable. They blame other people. They point fingers at the market like it's the market's fault, like the market's watching you. The market's not watching you. There's not somebody sitting on the other screen, hey, he's going up, let's stop him. There's not an AI on this market saying, oh, he's going up, let's go down. Because are you thinking that same thing when it spikes you in? Because I'm certainly sure you probably had times that prices spiked you in the last second and you're like, damn, that was a close one. Yeah, that's just because your understanding of what you've seen somewhere was a little off. You just got lucky at that point. You know, when I take a trade, regardless if it's a win or lose, it doesn't matter to me. I've already accepted the fate of this money that I put into my trading because it's part of my trading budget. I don't have no worries. I don't care if I take an aggressive trade and I lose a chunk of change. It doesn't matter to me. That's part of the game. I know that, and that's my decision. If I wanted to take a 15% trade on my personal account, that's my decision. That's why I created this smaller account, because there's some people that want to copy. There's people that want to take the trades that I'm taking. I'm aggressive with my personal account. You're trying to learn and get the understanding of what I'm seeing. It's not going to benefit you to watch me be aggressive on my account when you barely even understand what I'm doing. So that's why I went towards more of a smaller account, so then I don't got to worry about somebody's copying my account. I got to be careful if I'm trying to be aggressive because maybe their balance isn't nowhere near my balance and one trade could take out their account. Well, that would seem pretty stupid to do and pretty unethical. I'm not that type of person. So it made more sense to make a smaller account to where, hey, a lot of people were trading with small amounts of money. Let me stick to a specific amount. With my personal account, I do a percentage. I trade by percentages because I'm compounding the percentage up. Like, I use it's called a compound interest calculator. I build a plan up of my balance, and sometimes my plans be very aggressive at first, and then they slowly decrease in tier because as capital gets larger, I'm not going to continue to trade aggressively and trade high percentages because the amount that I'm trading begins to become more than what I even started with. So why would that make any sense of me putting that much risk on the table? I'm just trying to get to a specific point faster. And I know that in order to make money quickly in trading, I need to have leverage. Okay, well, at the moment, I have some leverage, but it's not quick leverage. And I have a budget, but my budget doesn't, I can't take 10 grand and go put it in an account right now. I have other certain things that are in line and other things that come first before my trading budget. That's how I keep my emotions from being involved in my trading or having to worry about my money or any type of situation like that. So I put money in that I can lose over and over and over and over and over again and it not matter to me. Well, $10,000, if I only got like a $10,000 trading budget, me putting the whole $10,000 in that account is that would be kind of ignorant to do. That doesn't make any sense. I'm putting everything in one basket. They always say don't put your eggs in one basket. I try not to ever put my eggs in one basket. Sometimes I'm just aggressive with my basket. Sometimes I like to be aggressive. I like to make money. We're in the game to make money with trading. That's the whole reason you're here, is to make money at your computer or wherever you're doing. You want to make money doing this. You're not here just to look at some charts and learn how to draw some lines and some squares. You're trying to get an understanding so you can make some money. And the purpose of me doing this is so you can really understand what you're looking at. Like, I want to be able to give you that ability to ask questions and see things and say, hey, what about this? What do you think about this? Okay, well, you're not wrong. I see what you're seeing, but this is why I wouldn't do it because of this scenario. And I'm only utilizing information that I built over time because I've been in the market 24/7, 7 days a week, literally for almost 3.5 years straight. I've just now decreased how much time I put in the charts just because I'm building this community. I'm doing these labs. I'm doing other businesses that I'm building up as my trading's getting better because I'm taking the capital that I'm making from trading and investing it into other places. I'm not putting my money in all in one basket. I have a budget set aside for trading. I have a specific plan set to how I'm going to go full-time trading because I have a child and I need to make sure I can always have a roof over my head. And when you're becoming profitable at trading, it's a very up and down game. So if some people have this situation where they ain't got kids, they ain't, they ain't got rent, they ain't got this and that. They can take extra risk. At this moment, I'm taking enough risk by being aggressive. I still need to have cash flow though. My cash flow has to be more than what I'm outputting or what I'm even trading, because if it's not, then it doesn't make any sense for me to be putting money into trading if I don't even have any cash flow to continue to come in, and me be worried about that money because, hey, well, I used my whole paycheck this week and I really kind of need to make this flip work because I need this money. Well, shit, you're going to put yourself against the wall. Some people, sometimes it works good, but this is finances. This isn't like you putting yourself in a brick wall to win the state championship or to be the top speller in your spelling bee. This is financial money. This is money. More than likely, a lot of people are using money that they probably could see best fit elsewhere, but they're trying to expand their income. So they're doing this. Have a good night, Lou. Oh, Nick said he got to hop out. Got to handle some work quick. Oh, man. All right, Nick. Have a good night, Nick. So
Later.
that's why you have to be serious about what you're doing and not take it like a game, not treat it like I'm just trying to flip my money quick. You can flip money quickly. When you have an understanding and you have good discipline, I'm telling you, you can go flip $500 and make $5,000. It's going to hurt you more than you think it's going to help you win, because it's going to do nothing but put a negative. It's going to put it's going to engrave in your head that, hey, I can flip an account every single time. And then more than likely you're going to have times where you can't flip an account and things go south, and that's going to be more often than not. And the only thing that you're going to think about is that one time that, hey, I did do it. I was able to flip that account in a weekend and I was able to make that money back. It's not sustainable. You got to find something that's sustainable as trading. Now, for you might be able to live off of $100 a day and maybe $400 a week or something that's very minuscule. You don't have to try to get rich off of trading to take it full time. It's very easy to go full time with trading, especially if you have a good understanding of what you're doing and you have good money management and risk management. But if you have a lack of any of those areas and you're spending more than what you're bringing in, and you start to make more money and you're trying to up your lifestyle as it goes, it's not going to work. You're going to just end up crashing and burning. And that's not the goal of what you're trying to do. Is there any questions with anything that I've talked about? We got a good understanding of zones. We got a good understanding of price speaking, our areas. Y'all understand momentum. I touched on the EMA, understanding how we can utilize the EMA in a sideways market. Is there any questions? Anything, anybody, anything? This is time. This is the time.
Well, I've got a question.
What's good?
It's about EMA.
Yeah.
Basically, I know you're using a single EMA.
Mm-hmm.
Well, someone like myself, or others, I don't know if anybody else. Um, I use 3 EMAs, and it's kind of different the way the way you guys read your EMA, the singles, more than the three EMAs.
Yeah, because three EMAs, you're utilizing the areas in between as probably more of a price to come back and retest in this area, and that's where you look for an entry type of scenario.
Yeah, not only an entry type of scenario. Mine, the 3 AMAs that the way I use it and the way I understand it on myself is it gives me. I understand when it's a collection order. You can clearly see it
Mm-hmm.
on, and I understand it when it's back testing on the market on the zone. But at the same time, when it's continuation, you can actually see it. You'll know it on the 3 EMAs. So where single EMA, you only see it just you know after like 2 3 candles movement. Does that
Yeah.
make sense?
Yeah, because I'm
Yeah,
only utilizing it for the entry. I can see
yeah,
the things that you see with those three EMAs. I can see it without
mm,
the EMAs. I like cleaner charts because I'm more focused on price action and my major areas. That's where I'm looking for EMAs. Sometimes you'll fall into a habit of focusing solely on them EMAs being your only confluence. Now you're utilizing price action as well. It's just helping you see specific things a lot easier. There's nothing wrong with that. I just don't utilize them because I just don't need them. I can't tell you that I use the 20 EMA every single time. I can't tell you that I don't use it every single time, but I understand why I'm using it, and it can be beneficial in certain scenarios. So I do utilize it in specific scenarios, but it's not like my end all be all. I get why you're using the three EMAs though, because it's helping you see specific actions of the market, and it helps you see it easier versus looking at a blank chart. Does that make sense?
that's correct because it's
Because you're still getting the understanding of seeing probably like a blank chart, like you're just probably now kind of really seeing market patterns real well in specific things, because now you're kind of you're starting to get an understanding of it. The more of an understanding that you get, the easier things will be to see, and you'll more than likely slowly decrease using them, or you'll get rid of them altogether. Now, it might be something that you utilize on top of what everything that I tell you, because I'm teaching you price action and the understanding of what price is telling you, and you can literally use that information and add an indicator to it to amplify your confluences. I don't do that because a lot of the times I would have a habit of, I just need to focus on this indicator. I'm not worried about the indicators anymore. I focus more on price action because I know it's telling me everything that I need to know. Some people will add other things to the confluences because it helps them see things, and it's something that they've utilized for the past 2 years. I can't tell you not to use something that you've been using for the past 2 years. Why stop you? Like, why fix it if it ain't broken? You're trying to fix the things that are broken. If you're able to see certain scenarios with the EMA and you can understand what you're looking at, ain't no problem with that. You're still trading the price action. It's just helping you see it clearer because,
more clearer.
yeah, exactly. There's nothing wrong with that. It's just like I'm in talks with brothers to have brothers come in here and do a little session, and he's going to go over pretty much how he trades, and he's going to answer questions and talk about his synopsis on the market. And you're going to see that I think he uses like 2 or 3 EMAs, and he also uses Bollinger Bands, but he's 100% using price action, Hakanashi candles, level line breaks, and he's using zones. Bollinger Bands and the EMAs, they help him see certain things better. I've never asked him why he uses them. That's something that, hey, when he comes in, I'm probably asking him that question. Hey, what you use the Bollinger Bands? What's it helping you see? Because you'll get such a good understanding. You can throw indicators on there so you don't have to go from time frames to time frames. You can just look at the higher time frame. Okay, I see this case built. I can go to the lower time frame, and I have a specific EMA showing me everything about where the zones are at on the higher time frame, or I have the stochastic telling me that it's super oversold, so now price is going to start trending up. Like, there's certain things that people will utilize them indicators to help them see things quicker, and they don't have to move around on the market so much. But people that are new to trading and they don't really understand indicators or how an indicator is even getting its information, well, they just rely on the indicator itself. Now, indicator strategies work, but they only work for so long. I'm certainly sure you all know that you've went and used the indicator strategy and it worked really well for a little bit. And then when it didn't work, it really didn't work. So there you come into those scenarios. And the reason is you just don't know what that indicator is telling you. You don't know the information that it's really telling you, because you've only been told it's oversold here, sell. It's over or buy. It's overbought here, sell. It's just like the thing, if price is high, sell. If price is low, you buy. Well, that's pretty, generic. Like that's like saying, get the milk. Well, what milk? You want chocolate milk? You want D milk? You want, like, what milk? You drink almond milk, or are you lactose? Like, you got to be more specific, because those things are helping you see specific things about the market. He said the 17 EMA and the 20 EMA, when the 20 EMA close to price, that's how you know momentum is getting stronger. Does swing trading work with Takanashi? Yes, sir. Yes, sir. If you trade like traditional, like if you're talking about on traditional markets, I do everything setup-wise with traditional markets with my Hakadashi candles. The only difference is when I'm in a trade, I switch to traditional market, like the traditional candlesticks, because I can see price moving versus seeing the average. So then I can understand that, hey, price is starting to slow. Because I understand specifics of, Japanese candles. I started out with Japanese candles. I just never focused on a whole bunch of candlestick patterns, hammer this, that, the wet. Like, I focus on market patterns, because those are what I seen often. I seen the hammer all the time. I seen doji candles all the time. I seen what the hell is it called? Where the candles overtaking all the other candles. I can't remember what it's called. Yeah, the dragonfly, all them things, like, all that stuff happens over and over again, and people focus on utilizing those. Market patterns are king, because market patterns are formed by price action. And price action is literally everything to a market. Like, if you don't understand price action and you have a bunch of indicators on your chart, you're more than likely at some point going to crash and burn, because you don't understand where them indicators are getting their information from and what them indicators are really even telling you. Because, like I said, you use indicators to help you see things quicker. If you can't understand why they're even showing you what they're showing you, or understand the information that it's actually showing you, then it becomes useless. You're just relying on that to be your eyes in the market, to be your understanding in the market. And that's just like going and purchasing signals and relying on signals, or going and getting and copying trades and just relying on copy trading. It's not what it's for. The only reason I offer copy trading, because I know people may be working and they want to just make a little extra money. I know that people don't want to join a community. They just want to copy trades because they think that's how they're going to get profitable. Warning to you, you're not going to get profitable. You're more than likely going to probably lose money, because the only time that it's going to work is if you're not trading on your own outside of you copying somebody. And that's even signals. The only time it's going to work is if you're not trading on your own outside of their signals or their copy trading, because what's going to happen is you're going to probably lose, and then there might be a day that they lose as well, so now you just lost double in that day. Or B, you're not going to set your account up right, you're going to copy way over leverage, and they might have a losing streak and it wipe your account out and they only lost maybe 5%. So now you're going to be pissed off because your whole account's gone and they've made profit back because they were able to trade the next day and you weren't. So there's certain scenarios like none of that shit works, and it only gets you so far. If you don't understand what's going on in the market, why a person's taking the trade, how they got the information to even enter on that trade, and this and that, well, you might as well just take your money to the casino and go gamble it away, because you need to be in control of everything about your finances. And if you're not, and you're just relying on somebody else, you're not going to hold yourself accountable, and it's not going to end well for you. So, is there any other questions, any other things? I apologize for going off on tangents. I like talking. I apologize again. I say this every time to the new people. I apologize to my folks that are here every night. I appreciate y'all.
That's cool, man.
So, do you have a video on which market patterns we should look for in the market? On YouTube, I don't think I do on YouTube. I know in the course I do. In the course, man, I have everything that I just talked about. I'm literally breaking it completely down. Like literally every single thing, I try to break it down completely. And I also have like some actual like let me see the market patterns. I have like some examples to show you, but just head and shoulders, double tops, double bottoms, and I'm not really like utilizing those as like my end all be all. They just add confluence. But same chart patterns that you see on Google, that's what I'm looking for. But I understand that they're not going to look as on point as you see in all these charts. But these are just a good reference to look at. And it's also a preference that you'll build over time being in the market. The more that you're in the charts and actually, grinding and putting the work in, the easier this is going to get. The more often you're going to see specific things happen. And when you journal, it's game over. I know somebody that journals trades that they don't even take. They journal the trades that they might have took. They journal trades that they impulsively got in. They do all of this, and then every week they go back and they analyze that data, and then it literally they're able to prevent them from taking impulsive trades. You're human, you still take some, but they prevent themselves from taking impulsive trades, and it also helps them from hesitating to get in certain trades because they're able to journal the hesitation trade. I didn't get in this trade because this happened, and those things can start. They really help you get better on the long run. It seems like a lot of work at first, but eventually you're going to have so much information, there's going to be no work but you just to trade. And at a point, being on the charts too long is not good for you. Your brain then becomes mush. You're just seeing the same thing over and over again, and what you're seeing begins to start to not look like what you're seeing.
Yeah, I mean to ask you, that chart, this chart, the last one on the picture.
Yeah.
Is that
It's a hook pattern.
is that the chart? No, the last one
This
on the
one?
bottom.
Yeah.
Yeah, that one.
Yeah.
Is it that chart is just for the candles, isn't it? It's not for Heikin-Ashi
No, this
chart.
isn't candlestick pattern. This is market patterns. So market patterns you're gonna see on Heikin-Ashi and traditional. They're patterns that the market makes. Like price will make these patterns often. The main patterns that I see often are head and shoulders, reverse head and shoulders, and double top and double bottom. I see those often, more often than not. And then I also see these hook patterns where it's like momentum is strong on your side and then it slows down real hard and it's a pullback on the lower time frame. And that's why you can go down way deeper down into the time frame and you can get that more precise entry because it's patterns like this that I've seen more often than not, and I do really well with these patterns. I just have to get down to that lower time frame and take the entry before price starts going, because once price starts going after the hook pattern, if you've missed the entry, it's gone. So, but yeah, these are market patterns. There shouldn't be. I don't trade any candlestick patterns. I know there are some power patterns with Takanashi candles and stuff, and I'll have to go over them a little more, and then I'll talk about them. But there is some like power patterns that people use in order to enter off of the Takanashi candles, and it's like it's certain scenarios that price make, like that candles make on the lower time frame, that you can utilize as an entry pattern. I haven't utilized them very much, so I need to back test them and actually, get an understanding of them. I'm not going to teach you and throw you something out there that I've never utilized or really had a good understanding of them. I've understood them. I've heard them before. I've seen them be used before, but I've never really actually myself took them in account and actually used them specifically for a reason. Like, I just maybe used them off as watching my mentor take a trade off of them or something like that. It's not like I took the trade myself off of, hey, I have this power pattern and this with these candles down here at this lower zone, like that's why I'm entering type of thing. That I haven't done that yet, so I'll back test that.
Do you?
Go ahead.
Sorry. Do you use any other method like RSI or MADC
Nope.
or
Nope. Don't use any of it.
CCI or whatever?
Nope.
None
I
of
actually
that.
No, he
started.
trades.
Go ahead. Go ahead.
He trades price action, which is
Yeah.
Just strictly price
which
action.
is
No.
basically
Go ahead, Preston. Go ahead.
it's just pretty much just no indicators.
Mm-hmm.
So like he knows the chart and he knows how to trade without, indicators. That's what price action is.
I can just see the things that you would see with your indicator. I can see them. I could see it without having to have the indicator, and that's the holiness of price action, is you can see everything without having the indicators. The indicators just makes everything a lot quicker when you have the understanding of why they're even doing what they're doing. And most indicators get their information off of price action. We're utilizing the EMA with the Takanashi because it's an average. It's giving us an extra confluence and an extra.
Confirmation.
Yeah, exactly.
Yeah.
Exactly.
No, because I see a lot of different people in YouTube. When I kind of look
Yeah.
at them,
Yeah.
they tend to use the RSI. It's like I'm like thinking like you gotta concentrate on RSI more than your candle, because
The issue is
it's like
they teach it like they teach it to where you rely solely on that. You're not relying on what.
no,
Go ahead.
even that. I've asked them a question and they even don't know
Oh
themselves
yeah, they
because
don't know. They
you
don't know.
don't
They
even
just
they
copying and
don't know that.
pasting.
Yeah,
Yeah.
they just looking at it like you know y- the the sign of the two when it hits the 70% or when it hits the 30%. That's your if he goes above that and he's gone down, that's your entry. But I'm like thinking, how do you know it's your entry if it hits it? How would you know if it's gonna reverse back and go back up to 70?
Cause
or stay on the
it's
flat on the
overbought.
same.
That's why they know.
I'm like confused.
Yeah, no. So when I started out trading, the first thing I ever learned was divergence. That was the first way I started taking trades was divergence, which utilizes
yeah,
the
I started
RSI.
that version as well.
Yeah,
Yeah,
yeah. So
but I just, for me, I just,
I
just
look
stick
here.
with
I'll show you.
what I like.
I'll show you something here. I'll show you something. Let me see. I have a video where I used to trade with a whole bunch of indicators on my screen. Like literally like probably like 5 or 6 indicators on my screen. And I made money, but it wasn't I didn't understand what I was doing. I was just taking the entries off of the way somebody was telling me to take them. It wasn't like I built that understanding of, oh, this is how you take it. No, it was more of he said to take it like this. He said to enter here, so I'm going to enter there. And yeah, well, it doesn't work very well. Look. Look. 1, 2, 3, 4, 5, 6 indicators. And we got the stochastic down here. And I'm still at 5K. Didn't know what I didn't I kind of understood it. And I'm trading traditional like the traditional candles.
Listen,
I'm
my
telling
head
you.
would hurt.
I'm
I'll tell you
telling
this,
you.
though, my brain will be hurting me, man. Me looking at those in
I'm telling you. I've
Probably,
traded anything that you've probably seen on YouTube. I've done it. I've tried it. I've attempted it. A lot of them I made money with. But a lot of them took all that money back that I made because I
yeah.
didn't know what the hell I was doing. I was just going off what somebody was telling me. The goal isn't to just let you go at it and not really know what you're doing. The goal is so you can understand what you're doing, to really get that grip and that that understanding of what price is telling you. And then you could take that when you have that understanding, you want to add some indicators, you can add some indicators now. Now you understand where the indicators are getting their information from, and then you can even do some more studying on that indicator and get more detailed inside the indicator. Because the Hakanashi, well, not the stochastic and Bollinger Bands and all them things, they all have specific things you can utilize them for, but the information that they're getting to tell you them specific things is based off of price action.
I'll tell you what, yeah. I studied the EMA for 1 year, just the EMA alone, for 1 year.
I bet you got a good understanding, but you didn't get
I
far
I
with
I I actually
because you're relying on one thing. That's just an indicator. That's like
no,
driving at that's like driving
I
at night.
understand it.
But think about like you're driving at night and all you
You
have
need the light.
all you have is a turn signal. You
Yeah,
don't got the
you need the
headlights.
light.
Yeah, you don't got no
That's it.
headlights. You just got the turn signal. So you're slow. You're seeing ahead of you, but it's
Yep.
not as good as if you had the lights,
Uh,
everything together. So a lot of the times there's things that you're missing that you got to grip.
I could see it. One is about to do collection order. I know it exactly when he's doing it
Mm-hmm.
through the EMA, and I can see it. It's like for me on EMA's, it is supposed to, you know, give
Yep.
you confirmation
Yep.
what you're thinking. You may read in the chart, and you may read in, um, your lines and everything else, but at the same time, you want full confirmation, and the final confirmation, it's your EMA, and you're thinking, yeah, okay, I can see it. Especially a lot of for me, yeah, okay, you might use one EMA, but when I use three EMA, I know my 21, the way it moves compared to 8 is completely different. And then my 21 and 55, the way they move is completely different. So those are the signs that I look at that gives me final confirmation.
Yeah.
So I see it consistently. So I used to say, though, why is he moving so slow compared to it? But now this is like a year, when it was like a year, and when I say it, why is it taking it so slow on this cut this email compared to then when I studied it, I understood it much better because each of them has a um, different movement. It moves along with the price
Mm-hmm.
compared to it, and EMA gives me like the right price action
Yeah.
towards it. So that's
Yeah.
why I kind of stick with my EMAs. I
Yeah.
don't care. Yeah, I don't want to know anything else.
To under
EMAs is my price action.
to understand market patterns, it took me about um when I because the man, I did a lot of like backwards shit. Like I did a lot of shit backwards. When you do trading, you really got to focus on getting your understanding yourself and knowing who you are. So then when you really have a good understanding of the charts, you don't have to worry about trying to fix your discipline, trying to work on your psychology, trying to prevent yourself from getting triggered with your emotions. You prevent all that stuff. I didn't do any of that. I focused solely on trying to make money for almost 2.5 years, just trying to make money. And eventually I started to make money, but I had lost so much money that the little money that I made, like that $5,000 account, that was the first time I had ever hit 5,000, and it was in 2021. I have videos, I have like a bunch of journaling videos from 2021 all the way up to now, and you'll see the progression where I really start to focus solely on just the markets, and to really understand patterns it took me probably maybe like 2 months. And after consistently being on the charts every single day, I started to see them without actually having to like focus on trying to find them. They just stood out to me. And now in this point in my time, 4 years in, I've done price action trading for 3 years of it. Um, I everything pops out from my zones to me seeing the entry and all that stuff. It literally is already in my head before I'm saying it or before I'm even taking it. I've already seen the idea play out, and I'm just trying to capitalize on that. And me slowing down gives me a bigger edge because I have the ability to uh, get more information and utilize it. But patterns is very quick. You're going to understand patterns very quickly because they're repetitive. They happen often, and they happen in every market that you look at.
True.
There's different variations of them, like that. The double shoulder or the triple shoulder that I talked about. I'll go over those when we get to the pattern section, and you'll probably see things that I haven't seen before. So it's just something, you being in the markets repetitively, you'll see it. You just have to put the hours in. Is there any other questions? Anything else? I did open the trial up again, so if you did get access to the trial once, you can get access again. Yeah, LoughKey, can you add cap? Yeah, I can add CapCut to the journaling link for sure. For sure. And if you want the full course, because there's only a couple videos on there, full course is you can get it with the monthly subscription. You just gotta pay monthly, stick to it. And it's like I'm doing labs the whole year, so every other month I'm gonna do one. So after the end of this month, it'll be a break. It'll be more live trading, helping everybody in the community start taking their own trades and really help them get an understanding. And then at the end of that month, in what is it, April, July, so what is it, January, February, March, April, May, June, July, so April, May. In May we'll have another 30-day lab, and it'll be throughout the whole month, and then we'll take another break off. But in order to get to that, you got to either purchase the course, which is $150. You get the course for a lifetime. You get all the updates, and you get 6 months access to the community. Or some people in certain circumstances can't fork out $150, so then you have that ability to just pay $25 for however long you want to work on the course. Because, you know, some people might get in the course and be like, I don't like this. They spend a whole month in, they might not like it, and they don't want to be here no more. Well, they only wasted $25. They didn't waste $300 or $1,000 or so. So the goal isn't really to make money off the course. The goal is to give you the knowledge to have something that I can teach you and help you get the understanding of. So that's why the course itself is there. If there's no other questions, then
Hey, Lo.
yeah, what's up, Dennis? What's good, Dennis? It's nice hearing your voice, man.
I know, isn't it cool?
I mean, it's more cool for you, you know. Yeah, but yeah.
Yeah, well, it's a lot easier to talk with you. That's
Oh yeah. Oh heck yeah, I bet.
So, I just got a question on, on the affiliate.
Yeah.
On Pocketoptions. I've been with Ray for a while, but now I'm pretty much 100% with you. So I'd like to, trade that, change that affiliate over. Now I know I've got to have a new email address to start a new account.
Mm-hmm.
But what happens to the funds that I have in that account?
You'll have
the
to.
one I have now.
You just want to withdraw them before you switch accounts. Now they're not gonna. PO's not gonna take your account because, like I have multiple accounts, and like I'll close an account so then I can go trade on a different account, and there's certain accounts that I have cash backs on, so I'll go and trade on those accounts, and I'll be super aggressive because I don't care about the money, and I know I'm gonna get a % back. And if it fails, but like there would be times that I would close that account, be gone for like a month or 2 months on a different account, and I'd come back and the money would still be sitting there. So PO is not going to take your money, but the best advice is just withdraw the money first, and then you can cancel it. Just cancel the account. And the best way to cancel it is don't say that you're creating a new account. Just say, do one of the scenarios where it's like, my trading wasn't successful and I want to stop. It gives you the ability if you want to go back to that account and trade, or like I do that because I want to be able to go back to all my accounts eventually and be like, hey, this account was completely negative and look what I was able to bring it back to. And this account was, I have a record of my trading history and my journey. That's why I keep all my accounts. But there's accounts that I've hit the button and it deletes the account. Because if you say that you're creating a new account for affiliate, they don't care. They don't care. They have no problems with it. They just want to make sure that they delete your old account. The other way, your account will always be there. They say they're going to delete it in 30 days, but they've never deleted any of my accounts, and they've never kept the money that's sitting on that account after I closed it. They always give you that ability to withdraw the money.
Okay, so I think I had an account once earlier under a different email address.
Yeah.
But I don't think it was necessarily affiliated with anything.
If you actually created an account with it, you'll have to create, you just got to make a new email. Yeah, no, but you could probably contact support, and they might possibly be able to delete the account. I don't know how well that, like if they can do that, but they don't have problems with people switching accounts. So it's not like something that you got to like hide. So if you wanted to go ask them like, hey, can I keep this email? How can I keep this email? They might say change your email on this account and then close that account. I don't know if that works. That might be something like, because I know that some people don't want to go make a new email. Me, I probably got 20 emails. I don't use any of them, but I got like 20 emails for no reason, because I kept making accounts. So yeah, I always like starting fresh.
Well, yeah, I could just make an email and just use it for this account with PO.
Yeah. That's what I got with this. Yep, exactly.
Yeah, not send out messages with it or anything like that. Just do that.
Yeah, exactly.
A letter or two on the older.
Exactly. Yep.
Okay, well then I'm. And I know there's a link for your affiliate somewhere.
Yep. It's in the. It's in the announcements. If you go to the announcements, it's the easiest thing to see. It's literally like right at the top, and it has the affiliate link and then the chat link. And yeah.
Okay.
So.
Well, cool, bro. I'll get on that, because like I say, I mean, I've been with Ray a long time, and he's taught me a lot. But now I'm just hanging out with you, and it only makes sense to do this.
Yo, cool, man. Well, I'm glad to have you,
Yeah.
man. So,
Well, I'm glad to be here, bro. I think I'm finally starting to maybe make some, you know, I like that understanding that you were talking about.
well, good, good. That's why I'm doing these.
Yeah.
That's the whole point. Is I enjoy doing these, and it helps me get even better understanding. And as people get an understanding, I can understand how to help them get a better understanding, or help the next person get a better understanding. So,
Yeah.
in my eyes,
I'm
it's
really
doing
glad we
nothing.
get together.
It's benefiting both of us. So,
Cool, buddy.
cool,
All right,
cool.
everybody. Well, I guess I'm gonna check out now, but I'll see you guys tomorrow.
Alrighty, man. I'll see you.
Okay. Thanks.
Yes,
See
sir.
you, man.
Good night, everybody.
Later, later. Any other questions or anything else? I'm gonna start.
Nah,
Geo, I'm gonna start streaming on YouTube. I was gonna do it at 1,000 subs, but I'll probably do it at 500. I'm at the moment I'm kind of debating. Depends on when I hit that 500. If I hit the 500 during the lab, I might not do it because I'm not really that prepared to go live streaming. So, but I definitely am gonna do streams on YouTube. But more of the streams on the Discord because people are paying to be in here. I want to make sure they get the value, and they also want to be able to take the trades with me. YouTube, I know that you be in the YouTube chats, man. A lot of them be trolling. That ain't good for your
quick,
mental when you're trying to trade. And you're trying to teach people, you got somebody trolling like, this dude don't know how to trade. He's trading $5. Like, bro, you're in my chat. Why are you hating? Like, that doesn't even make sense. So I know all about the trolling. Believe me, I troll, but I don't troll to an extent like this trader sucks. Like, no. I mean, every strategy works on the internet. Just they just be mad. They be salty when they suck at what they doing and they see somebody else doing it. They really be salty. It's funny. But I can't, I was in that position
quick,
before. I know what it's like to be a hater. So,
quick question,
Yeah.
Luke.
what's good, bro?
I'm gonna be
Um,
right back.
All right, bro.
where do you? I've been trying to look for the sessions that you record.
Yeah.
You say you posted them
If you go
in Discord.
to look right above our chat, like the live class, look right above it. There's a section that says recorded sessions. You'll click that, and
Uh,
there's a link that takes you.
ah,
It'll take you to them.
okay,
Yes, sir.
okay.
Yes, sir.
Which link? The mental health or the
Not the
user?
Google Drives are older. I need to fix those. The most recent one, the WAP
Okay,
live trading and
no,
recorded sessions.
okay, live trading recording session. I think.
Those Mental
Okay,
Mondays, you can go to the Mental Mondays. It's like the beginning of that book that we were reading. But
yeah.
I'm trying to maneuver to a different platform to hold the content so it's easier for you guys to view, because Google Drive can be kind of redundant and it can mess up often. So I don't want to put those videos on a specific platform and then maybe I lose my rights to be on that platform because they're recording an audiobook. That's a copyright standard.
Okay.
But I'm not like I gotta read into WAP's terms and conditions, and I gotta talk to some of the support to make sure that it's okay to do that, because I plan on recording those sessions for people that can't make it, and they want to
Mm-hmm.
wake up and have some motivation or listen to a book because they can't they can't afford the book at the moment and stuff. That's what it's for. But I want to make sure that I'm not going to hurt myself on the platform that I store everything on.
Yeah, yeah.
So
No, because I would just wanna. The only reason is when I get up, because your time zone is different. So when I
yeah,
instead of waiting,
yeah,
I try to look for it so I can actually go over it for
yep.
myself. And I was like, where the hell is this? Where did you, you know?
Yeah, yeah.
But yeah, yeah. Now I got it.
Cool.
It takes me to the yeah. So
Yes, sir. Yes, sir. Well,
thank you.
you're welcome. You're welcome. Is there anything else? Everybody good?
No,
I think we're
I'm
good.
good. But
Cool.
so far,
Well, I think that's gonna end the session. I appreciate everybody that came. I hope that you guys were able to get some value from it. Um, oh, Woot, my bad, Woot. I apologize, Woot. You might have been trying to unmute, and I done had you muted the whole time because I think that you forgot to. I apologize, Woot. I ain't mean to have you muted the whole time. I just figured you was busy at work or something, and I thought I'd help you out. I apologize. I forgot you can't.
Oh hell nah, you straight, bro.
Man, I forgot
was
you
at the
can't
crib.
unmute yourself if I mute you. So I was like, oh shit, if he might have been asking some questions. You good? You got a good understanding?
Nah, bro. I was gonna say appreciate it, bro. I'm straight though. Like you broke it down, gave some gems.
Cool.
Shit, bro. That's it, bro. Like you did everything. You feel me?
Cool, bro. I appreciate it. Thank you. So
Appreciate you, bro, for sure.
yes, sir. Well, if that's it, folks, then I will see you guys tomorrow. And
Yes, sir.
yeah,
This is the first time I'm gonna sleep early, boy.
we'll get some good rest, man. Get some good rest.
Yeah, man. It's like before it was like sleeping at 6 in the morning, 7.
That's funny, man. That's funny. Well, fellas, have a good night.
You broke the record, 4 o'clock. It's all good.
It's all good.